Welcome to this video on interest rate risk, which is intended for those involved in the asset liability management function, including personnel and members of a bank's asset liability committee.
During this video, we'll discuss internal control and independent review of the interest rate risk management process.
To begin, let's distinguish between internal control and independent review. Basically, an internal control system sets forth personnel authority, separation of duties, inputs, policies, and procedures. An independent review process assesses the adequacy of the internal control system as well as other aspects of the interest rate risk management process. We're going to talk more in depth about these concepts, starting with the internal control system.
The board establishes and management maintains a system of internal controls to ensure the integrity of all elements of the interest rate risk management process. These elements include a corporate governance framework, policies and procedures, and the interest rate risk measurement and management information systems.
Generally, banks achieve an effective system of internal controls over interest rate risk by outlining roles, responsibilities, lines of authority, and reporting structures in bank policies and procedures. These policies and procedures establish appropriate separation of duties. An effective system of internal controls also ensures that the data and assumptions used in the risk measurement system and management reports are accurate and complete. It addresses compliance with approved policies and procedures. It provides for an independent review and validation to test the integrity of the measurement system and of the interest rate risk management process. Finally, an effective system of controls establishes follow-up procedures to monitor areas of concern.
Effective control of the interest rate risk management process includes independent review and validation. An independent review periodically assesses the interest rate risk management process to evaluate integrity, accuracy, and reasonableness, and covers the entire interest rate risk management process. The scope of the independent review would be commensurate with the complexity of the bank and would include several elements, which we will briefly discuss, beginning with the adequacy of the internal control system.
The review process typically includes an evaluation of the system of internal controls to assess the adequacy of lines of authority, separation of duties, and follow-up procedures to monitor correction of identified weaknesses.
In addition to assessing the adequacy of established internal control procedures, the review typically assesses the adequacy of personnel's compliance with the internal control system. This would include determining whether bank personnel are complying with established procedures.
An independent review can assess and validate the adequacy and appropriateness of the interest rate risk model given the nature, scope, and complexity of the bank's activities. An appropriate model captures the complexity of the bank's balance sheet. For example, for banks that have embedded options, the review would assess whether the model adequately captures and measures those items. Also, more generally, the review usually evaluates whether the model captures risk over both shorter and longer term periods, including risks to both earnings and economic value of equity.
The independent review process generally reviews and validates the accuracy and completeness of the data inputs into the risk measurement system. It can include testing of the internal control functions in place to evaluate the accuracy and integrity of data inputs from both internal and external sources. It analyzes and reviews the controls over data inputs to assess the consistency of the information. Finally, the review can test those data inputs periodically to determine whether any processes or data gathering tools have changed.
Review and validation of model assumptions are key elements in the independent review process. Important parts of the review process include assessing the reasonableness of assumptions and reviewing the adequacy of documentation to support assumptions used. Another part of the review process is evaluating the adequacy of sensitivity analysis on key assumptions. In conjunction with the review of model-specific elements, the independent review assesses the appropriateness of scenarios modeled.
The independent review process also includes a review of the validity of the mechanics and mathematics of the interest rate risk model. If the bank is using an internally developed model, Normally, it is validated independently, meaning that a party independent of those who run the bank's model assess the mechanics and mathematics. However, community banks using standard vendor models are not expected to test the mechanics and mathematics of the measurement model. Instead, management can periodically request and review the full validation reports from the vendor.
Effective validation processes are consistent with the materiality and complexity of the risk being measured. The party performing the validation may construct an identical model to test assumptions and outcomes, or use an existing well-validated model to compare against the model being validated.
In addition to validating the calculations of the model, independent review and validation typically includes backtesting. Backtesting involves comparing modeled results and assumptions to what actually happened. For example, if rates increased 200 basis points within the last year, the bank can compare actual net interest income changes over the last year to interest rate risk model results from 1 year ago in the up 200 basis points scenario. In addition, the review can compare key model assumptions to actual experiences. For example, the review may assess variances between actual and assumed yield curve shifts, prepayment speeds, deposit runoff, and deposit sensitivity. If backtesting reveals large discrepancies, management can isolate the cause. Was it because of insufficient assumptions or inaccurate source information? Isolating the cause will help identify whether any underlying factors need to be adjusted. This could improve model predictability and enhance the interest rate risk management process.
Independent review and validation findings are typically reported to the board. Most reports summarize the bank's interest rate risk measurement techniques and management practices, identify critical assumptions used in the risk measurement process, discuss the process used to drive those assumptions, and provide an assessment of the impact of those assumptions on the bank's measured exposure.
Some questions to consider when assessing your bank's internal control and review system include: does the internal control system address corporate governance, policies and procedures, and management information systems? Does your independent review process include a review and validation of data inputs? Is backtesting integrated within your bank's model validation procedures? Remember, a strong internal control system, verified by independent review, can help ensure a more robust interest rate risk management process.
As we conclude, we'd like to remind you that the FDIC has additional videos and resources that can be found on the Banker Resource Center at www.fdic.gov. If you need additional information or have questions or comments, please contact your bank's case manager or email the FDIC at supervision@fdic.gov. Thank you for viewing this video. We hope you found it both useful and informative.